Greeting, guys. Today I'll be talking about top-down analysis and trend line. When I talk of trend line, I talk of technical analysis, which is what I use. So that's what I use in trading forex. So today I'll be giving you a top-down analysis on forex market. Like, we are about to trade this market. What do we look out for? How do we start? So, guys, please don't forget to share this video, subscribe as well. As you can see, and don't forget to like so it can be recommended to others. Without taking much of your time, let's just move straight to the chart. Okay, as you can see, this is a current trend. From this top to this top, we have a trend line here. This is trend line. In a downtrend, we connect the tops. Why? In an uptrend like this one, we connect the lows. Those are the troughs, or we'll call them the bottom, something like this. These are what we call trend lines. Okay, let me just start everything as fresh. We can't just start analyzing this market here because we don't actually know the overall trend line or the overall trend of this market. Is it an uptrend? Based on my previous video, I dropped on uptrend and downtrend. Is the market a downtrend? So we need to move in a higher time frame. If you can see this 15M, which means 15 minutes, we need to move in a higher time frame that will give us more information about this market. So we'll go to a 4-hour time frame. On a 4-hour time frame, we shrink our chart to really see where this market is moving. Based on my previous video, if you watch my previous video on an uptrend, you see that this market currently is on an uptrend. The market is breaking highs. So if we are considering this movement, if you are considering just this movement, we always see that this market is in an uptrend. As you all can see, the market keep breaking high. And if you can see here, if you've watched my previous video, you see I have something like impulsive impulsive correctional, just like that, and the market keep breaking high. So that already tells us that this market is in an uptrend, giving us higher high and lower highs, just like that. Keep breaking highs, keep breaking highs. Okay, that's one. We've identified that this market is in an uptrend. So our trend line goes below. That's the trough. Our trend line goes below. So we're going to have something like this. On the 4-hour time frame, remember, once we've identified the trend of the market, we connect our trend line from below or from beneath all the troughs. So we have something like this. And again, for this trend line to be valid, we must have at least 2 touches or 3. You can't just draw one touch and expect the market to respect it. So we have something like this. Okay. On a 4-hour time frame, this is what we are having. On a 4-hour time frame, we are having this trend line going up like this. And if you see this trend line, we had a reaction here. Market came to this point and bounced off this reaction. So it's showing us that like there's a zone here, there's a force here pushing on the market that we call the zonal force or the trend force here, pushing this market upward. The market still reacts here and goes back up on the same line. Okay, we have another touch almost at this point, but closer, but not touching the point, the line. We could still fix that in some scenarios that we have market manipulation. Then we have another point here at this bottom. We had a point here. So what are we saying for trend line? When we are using a trend line as a strategy, we are saying that at this point here, at this point, we had a bounce. Let me reduce the font size, something smaller. Okay. At this point, we had a bounce here. Same for the others. A bounce here too. We have a bounce here. A bounce. I hope you guys are understanding. Please, if you have any worries, just drop your worry in the comment section. I'll be there to help you guys on the question. And also here where we had another bounce. Good. We have another bounce here. So what is Trendline actually telling us? The Trendline is telling us that when the market came to this point, we had a bounce. To this point, we had a bounce. To the third point, we had a bounce. And to the fourth point, we had a bounce in an uptrend. So the next time the market is coming back to this trend line, we should be expecting a bounce. I hope you're understanding that. The next time the market is coming to this trend line, we should be expecting a bounce. There are scenarios where we expect a bounce or a break, but there are scenarios that when the market start creating higher highs and lower highs, and we have just two troughs, we're expecting for the third trough to be a bounce. But there are times that we really don't know if it's a bounce or a break. So we'll just wait for a confirmation on this trend line. So the trend line just give us information if this market is going to bounce or break. Like now we have this from the first 3 points, the first 4 points, 1, 2, 3, 4, and they are all bounced. And if you look very well, this market is coming close to this trend line. This video I'm making it on a Saturday, that's why the market is close. If it was on a Monday, you see the market moving. And if you look at this position clearly, you see that the market is coming back to this very trend line to give us a reaction here. You see that the market is coming back into that blue box to give us a reaction there, either to bounce off that trend line or to break it. And again, if you have something like this, that's on a 4-hour time frame, we can reset our chart. We'll go to a lower time frame to see if we can still have another opportunity like an hour or two. Let me take an hour. On a 1 hour time frame, we had a trend. This is the last bounce on the 4 hours. So if you look very well, we still have lows that we could still connect. That we have a trend inside a trend. So we connect the last bounce with other lows, something like this. With other lows. And if you look at this trend line that I'm just from drawing, the market respected it from this point. The market respected it from, there was a bounce here from this point. There was another bounce here from this point. Another bounce here. So the market gave us a bounce down there and a second bounce. So normally we were expecting a third bounce here. If somebody had this trend line inside, normally we'll be expecting a third bounce here for us to buy this market. Where the market actually break it, we'll be expecting a third bounce here for us to buy this market. Something like that. That's what we'll be expecting for the third bounce, for the market to come there and buy the market. And if you look clearly, the market came there and like try giving us W pattern like it was buying, but that was actually not the point. The market changed its formation and it keeps moving down. And if you look at this position, this is a clear break of a market, of a trend line. It's a clear break of a trend line. When I talk of a break, normally we're expecting a bounce and we saw a break. So at this point here, we had a break of trend line. When I talk of a break of a trend line, that is the market came to your point of interest, which is a trend line, and pass through it and break it, keeps going down. And for a market to break a trend line, let me show you an example where we have a re-breakout and a fake out. So you should not get confused between seeing a fake out and thinking it's a breakout. Like for example, can I find one here so you don't get confused? I really want something that you won't get confused. Like for again, it depends on your trend line. Like for example, we are connecting these lows. We are connecting these lows. Let me say from this point. to this point, and you're expecting this market to bounce off this point, let me say this in the blue box never happened. Everything here never happened. Everything here never happened. So the market was actually at this point. So we are expecting a bounce here. The low that the market should break at the same time with the trend line should be this low. If the market is breaking a trend line, it should also break a low. If you break a trend line without a low, it is a fake out. Be very careful when using a trend line. It is a fake out. So the market can actually break this trend line without touching this low. I think it's a breakout because it has just come below it. No. If the market is coming down below that trend line and breaking it, it should break a low for it to show you that no, this market has really break this trend line and break a low, and it's changing its trend from an uptrend which it was from a downtrend. If you see it breaks your trend line and keep going up. If you were buying this market at this position, or you were selling this market at this position where the market break the low and you want start to sell because the market is now in the downtrend after retracing your trend line, the market will take you out. The market will take you out because if this was a fake out, this position here, it was a fake out. That's my part. This point, this point here was a fake out, a big fake out. So that's what you should watch out for trend line. So when you're connecting a trend line, don't just go on lower time frame like you see this on 1 hour time frame. That's why it's not that solid like the one on the 4 hour time frame. So if you are connecting your trend line, make sure you go on a higher time frame, on a 4 hour time frame, on a 1 day, on a daily time frame, weekly time frame, and draw your trend line. You look for your market structure, the market movement. Where is this market heading to at this point? And when you see that, you connect the lows, and if it's in the downtrend, you connect the high, just like that. So you know where the market is moving towards to. Like before you start, like I want to buy, I want to sell, all those type of stuff. So after getting that, you steady strat. So after getting where the market is heading to, like you now wait to position for an entry where this blue box is. That's where you position for entry. And when after going on 1 hour time frame, you change to 15 minutes because that's where we execute on an hour time frame. On a 15-minute time frame, we currently see what the market is doing, and this is what the market is doing on the 15-minute time frame. The blue box we drew on 4 hours, see how big it is, and we are waiting for the market to react inside this blue box for us to know that this market is in an uptrend. If the market is breaking this trend line, for us to confirm that this market has really break this trend line, because if you look this blue box, the low of this blue box matches directly with the previous low the market created, which is this low, which is this low. Is the blue box is above the low. So we are saying that market should react to this blue box without breaking this low. If the market breaks this low and our trend line, we know that the market has changed trend. It's no more in an uptrend that we thought it was. It's now in a downtrend. So if the market is breaking our trend line and the blue box at the same time, and at this low also, this is the low, the market, this is the recent low that we are looking at. We are in an uptrend. The market should not break this low, because from what I just drew, the impulsive and correctional moves, if you see, let me just take something like impulsive, correctional, impulsive, correctional, impulsive, correctional, impulsive. So the market should just correct without breaking this low. Since we are breaking highs in an uptrend, then move its ways. So when you get that, this on the 4 hour time frame, like I said, it gave us a lot of information. We cannot go on a 15 minute time frame or 30 minutes or 1 hour and start drawing trend line. No, we're not going to get enough information. So after that, we come now on our 15-minute time frame and we wait to execute, either to say double bottom, to say doji candle, a reversal pattern on this point of interest, which is our blue box. Our blue box here is a point of interest. This is where we are waiting for the market to react and coming down. If the market wants to come below our trend line, you might see it as break, but before me, I will see it as a break. The market must take out this our low, our recent low, which is this point that the market just created. before you can consider our trend line as a break. But now we are expecting a bounce and we can still expect a break. Yes, it's possible. We can still expect a break. So a scenario for a bounce, the market should come, play around this position, do something like this, just around this position. You can just go beneath this, but not crossing this low. You can just play around this low like multiple times, then start moving back in its direction, just like that. So that's what we might be expecting here. And if the reverse happen, the market should be doing something like this, playing around these points, striking buyers and sellers, taking their SL just like that, coming, break this low. If it happen like that, retest back, comes back, give or go to a key level or give us an empathy, then it start moving downward. So that's it for trend line and top-down analysis. I hope you grab something for today class. Just stay connected. I still have much video that I'll be uploading for my beginners and the advanced traders. If you like this video, please share, subscribe, and don't forget to share the video so it can be recommended to others. Anyway, we'll be having videos on psychology level. We'll be having videos on types of analysis which is best to use. I recommend a technical analysis because you do the work, so it's not of that following sentimental or fundamental. So guys, see you on my next video. Don't forget to like, share, and subscribe. Bye guys.